Think you need to be rich to build wealth? Think again. In this video, I'm going to show you how to grow real wealth, from scratch, using proven financial tools that most people have never even heard of. We'll break down how to use the rule of 72, harness the power of compound interest, and build a system that grows your money whether you're working or not. And here's the best part. You don't need 6 figures to start. You just need a smart plan and the right habits. So grab a notebook, because by the end of this video, you'll know exactly how to build wealth that lasts a lifetime. Let's go. Ever wonder how long it'll take your money to double? There's a simple formula for that. It's called the rule of 72. Here's how it works. Take the number 72 and divide it by the interest rate or return on your investment. If you're earning 6% annually, your money doubles in 12 years. At 12? It doubles in just 6 years. Let's do a quick comparison. You invest $10,000 at 2% in a typical savings account? It'll take 36 years to double. You invest the same $10,000 at 8%? It will take just 9 years to double. See the difference? This is why where you keep your money matters more than how much you save. Now let's talk about compound interest, the real MVP of wealth building. Albert Einstein allegedly called it the 8th wonder of the world. And here's why. Compound interest means you earn money on the money you already earned. Let's say you invest $10,000 at 8% annually. In 10 years, it grows to $21,600. In 20 years, $46,600. In 30 years? Over $100,000. That's without adding another dollar. Now imagine you invest just $200 per month. In 30 years, that turns into over $300,000, all from small, consistent actions and time. The earlier you start, the more powerful compounding becomes. It's not about timing the market. It's about time in the market. Want to build wealth even faster? Use tax-advantaged tools that help you grow your money without the IRS eating a chunk. Let's break them down. 1. 401k. Offered by many employers. You contribute pre-tax, and it grows tax-deferred. Bonus. Many companies match your contributions, which means free money. 2. Roth IRA. You contribute after tax, but your growth and withdrawals are tax-free. Perfect if you expect your tax rate to be higher later in life. 3. Traditional IRA. Similar to a 401k, with tax-deductible contributions and deferred growth. You pay taxes when you withdraw. 4. Roth 401k. The best of both worlds. Higher limits like a 401k, but tax-free withdrawals like a Roth IRA. 5. Indexed Universal Life Insurance, IUL. A lesser-known wealth-building tool. You get life insurance plus the ability to grow your cash value based on stock market performance, with zero market losses due to downside protection. And yes, the money grows tax-deferred and can be accessed tax-free. Bottom line: if you're not using these tools, you're leaving serious money on the table. Let's clear up a myth. You don't need to time the market. You just need time in the market. Research shows missing just the 10 best days in the market can cut your returns in half. That's why the best investors stay in, keep contributing, and focus on the long game. Here's a simple example. Start at age 25 with $200 per month in an investment at 8%. You retire with over $600,000. Wait until age 35 to start? You'll have to double your monthly contributions to catch up. Consistency beats perfection, always. Let's put all of this into a simple system I call the wealth triangle. There are 3 parts. 1. Protection. Before you grow, you've got to protect. This includes an emergency fund, health insurance, life insurance, a will or trust. Without this base, one crisis can wipe out years of progress. 2. Growth. This is your investments. Stock market, index funds, real estate, business equity. This is where compound interest does its magic. 3. Cash flow. Wealth without income is risky. Build multiple streams of income. This can be achieved through your job, side hustles, dividends, rental income, and passive business income. Strengthen all 3 sides, and you'll build wealth that lasts. Now, let's make this real with a simple 5-step plan. Step 1. Use the rule of 72. Figure out how fast your current savings will double. Be honest, is it fast enough? Step 2. Visualize compound growth. Use a calculator. Plug in $200 per month at 8% for 30 years. Now you know what's possible. Step 3. Audit your accounts. Are you using tax advantage tools? If not, it's time to open one. Step 4. Set up auto investing. Automate monthly contributions. Treat it like a bill you pay your future self. Step 5. Build your wealth triangle. Write down what you're doing for protection, growth, and cash flow. Then take one action this week for each. This is how wealth is built, one smart step at a time. Let's wrap it up. We covered a lot: the rule of 72, compound interest, tax shelters, long-term investing, and the wealth triangle. But here's what really matters. Wealth isn't about luck. It's about strategy, discipline, and time. So if you're ready to build a future that's financially free, click that like button to help others find this video and subscribe to learn more about wealth creation.